Hello there, and welcome to the latest edition of Mondays with Matthew. Firstly, I wanted to thank all of you for your very kind words following last week's video. It makes me so happy to hear that you're finding my thoughts to be of value to you and your businesses. As I mentioned to you last week, the economy is going through a period of sustained economic contraction. You see, that's economist speak for we're going to have a recession. Now, of course, as soon as the dreaded R word is mentioned, well, that opens the floodgates for all kinds of prognosticators to start to opine on how a recession will be the death of the ownership housing market as we know it. Well, I thought I would take just a few minutes to give you my thoughts on the matter. Before we get into it, though, it's only right to preface my comments by stating that my thoughts and forecasts do assume that we're going to get through the COVID-19 crisis in relatively short order, and that the economy will resume somewhat normal activity before the fall of this year. Okay, with that said, I will start you out with this statement. We are currently in a health crisis, not a housing crisis. So let's break this down into three primary components. The first, housing supply. Before the COVID-19 situation hit, we were still in a significant housing crunch. What do I mean by that? Well, if we look at the number of existing homes for sale in America today, we are currently at a generational low. According to the National Association of Realtors, in February, there were just shy of 1.5 million units of resale homes on the market. Well, that's a figure we've got to go back decades to match. And if we look to the new construction market to significantly supplement the number of homes for sale in this country, well, I'm afraid we will be sadly disappointed, as new home construction is still running well below the levels that were seen before the housing bubble burst. Supply of existing homes is low for several reasons, but there is one reason that does get overlooked, and that is we are living in our homes for almost twice as long as we used to. According to Atom Data Solutions, at the end of 2019, the average homeowner had lived in their residence for 8 years and 3 months. Now, that's up from 4 years and 3 months at the start of 2000, so it's almost doubled. And this, of course, leads to fewer homes for sale at any one time. I believe that we will not see significant increases in the supply of existing homes coming to market, and this can only change if, and it is a very big if, we start to see builders increasing construction activity very considerably. And I do not see that happening, at least not in the foreseeable future. Additionally, I don't see supply growing as a function of a significant increase in the number of foreclosed homes that some are saying we will see as we move through the current situation. Now, I will leave this topic for another week. Suffice to say that the backstop provided by the FHA, the Federal Housing Authority, by the Federal Reserve, will significantly limit, in my opinion, increases in foreclosure activity. So we have supply limitations, but what about demand? Well, existing home sales peaked actually back in 2005 at just over 7 million transactions in the year. Now in 2018 and 2019, the figure was just over 5.3 million. That is a very significant drop of around 25%. Yet, the period between those two dates, the country continues to add new households. According to the Census Bureau, between the end of 2005 and the end of 2019, the country added almost 13.7 million new households. So where's everybody living? Now, of course, back after the housing bubble burst, the country added a significant number of renter households. But since 2016, the number of net new owner households has exceeded the number of renter households by quite a margin. And this is certainly what is adding to overall demand. And that's clearly led to a tight housing market in many parts of the country, with demand exceeding supply. Now, it's clear that demographic demand for ownership housing, although currently on pause in many parts of the nation, is still in place. And I find it hard to believe that this will evaporate following the end of the current economic slowdown. In fact, I would not be surprised to see demand actually increase as buyers consider their homes to be a financial asset as well as shelter, and look at housing as a way to diversify their own financial portfolios. In essence, they're looking, or could be looking, at housing as being more stable than the stock market, which is not unreasonable given the current turbulence in the equity markets. Which brings me on to the third and final component worthwhile discussing, which, of course, is home values. As I've already mentioned, the supply of homes for sale is unlikely to rise significantly, but demand is highly likely to return once the pandemic and overall economic contraction is behind us. Because of this supply-demand imbalance, as well as the belief that conventional financing rates will remain very attractive, if not actually lower than we see today, I do not see the potential for any significant price contraction in the housing market once we return to normal. In fact, I believe that the US home prices are likely to stay flat to actually modestly higher as we move through the upcoming recession and toward the end of the year. Now, this is a situation which, almost counterintuitively, was seen during every recession since the 1970s, other than the last one. During a period of contraction of recessions, housing prices did not contract. In fact, they rose fairly modestly. So, to conclude, the housing market was actually in very good shape when the virus took over and the economy started to contract. And I believe that it will still be in very good shape once we get back to normal, whatever the new normal may look like. The supply of homes for sale will remain low, demand will remain high, and I believe that prices will start rising again, albeit at somewhat slower rates than we've seen or have become accustomed to really since we came out of the last recession in 2012. Housing is stable. I think it will continue to be stable. I certainly see no massive contraction ahead of us when it comes to the overall housing market. Stay safe, and I look forward to seeing you all next week.